All right, Bulls and Bears back with another dose of economic reality. All-time high closings today for major stock indices here. S&P 500 included. We're going to talk about that. We're going to talk about the move for de-dollarization and what's happening with the BRICS nation. Hope everyone's having a good holiday, day before holiday. What's this? Independence Day Eve. I'm recording this on July 3rd. Hope everyone is doing well. Let's go ahead and get right into it. Start off here with the S&P 500 closing today. Early trading day today, early close rather. 5,337 on the S&P. And I think back just a few years ago, 2020, remember when the current president took over, people said he doesn't know what he's doing. He doesn't have a business background. The stock market's going to crash. Just the opposite happened, folks. And I said right here, again, for those that don't know, I think most of you know, but they can create an all-time high stock market at the click of a mouse. They create trillions of dollars at the click of a mouse, folks. It's not about who's sitting in the office, not about who's perceived as running the country. Remember, these people that they put out there, a new one every 4 years, they don't run the country, right? Sure, they'll do some things to get people riled up. You know, the right gets the left riled up, and the left gets the right riled up. That way, everybody's going against each other. In the meantime, it's the banks that pretty much run everything. And it's the top 10% that own 90% of all stocks, right? So when the top 10% decide to sell, that's when the stock market comes down. And I've said here numerous times, I said it's going to take something huge to make all these top 10 percenters hit the sell button at once and bring the market down, right? It's going to be new all-time highs until something huge happens. My timeline is actually coming up on the horizon. I do see something big coming up this October. That's just me. So I'll be liquidating my positions probably mid-September as far as any long positions. Just kind of take a wait and see approach. We know that every 4 years you have to be really ready for something wild to happen, right? So, you know, they like to throw a monkey wrench in the economy to blame whatever it is for the problems. And right now, most of the problems are amongst the consumers, not amongst the stock market that's controlled by the top 10%. And what happens when the consumer starts to get close to being maxed out? Well, typically, historically, banks, they start to restrict the lending. They tighten up because they begin to worry about the consumer's ability to repay the loans, repay the credit cards, everything else. Just the opposite happened this time. Banks started tightening, but then mysteriously banks started loosening again as far as the lending standards. Now it's more difficult to get a mortgage now, not just because the banks are tight, but because the home prices are just so high. But in general, banks are not tightening. It's only 1 in 5 banks. So that's why you still see people out there spending money. More reports of record holiday and 4th of July holiday travel, right? Because banks are still loaning out money. They're still letting people going further into debt. So at some point, we're going to see the consumer hit the wall, which a lot of them already are. We've got 1 in 5 people on their credit cards that are maxed out from, we reported that a couple months ago. But if the banks can just continue to raise the credit limits, then this could go on for a very long time. Now, the question is, what other programs are going to be introduced to help people? Well, take a look at this. Here's what they're doing now. We know that they're pausing student loans again. That's one thing. Illinois. Let's look what's happened in Illinois out of what is that, CBS 5. Illinois to erase nearly $1 billion in medical debt under a new law. Well, taxes are so high in Illinois that if they don't start giving people a break somewhere, people might not be able to pay their taxes, right? So I'm sure there's some sort of incentive for that. But that's just one of hundreds of examples of what's happening right now. Lots of different programs right now to keep people in their homes, restructuring of mortgages, down payment assistance to get people into new homes or to make a new purchase on a home. A lot of things happening right now. And pretty soon it's going to be whenever the next crisis drops, which I think we're just a few months away. Whenever the next crisis drops, there's going to be a re-implementation of a lot of the programs that we saw in 2020, and probably to an even larger scale, because consumers are even worse off now than we were entering 2020. Right? People are in higher debt, rates are higher, and most people right now are just living off of credit. Right? Well, let's move on to some other news here. By the way, we've got oil back up approaching $84 just in time for summer. We told you that was going to happen. Gold up to 2,369. Silver back up above $30, $30.55. We did see a brief dip under $29 and it bounced back up. 10-year bond yield, which is very important for the real estate market because that's going to tell you what's going to happen with mortgage rates. So the bond yield back up to 4.35. It had dipped down about 4.25. So things are still very loose as far as the monetary system. Rates are not going to be raised anymore. In fact, the Fed, they're talking about rate cuts now. They're talking about why they're not going to cut rates yet, but they are talking about rate cuts, right? They're not talking about doing it, but they're putting it out there. They're putting the narrative out there that because inflation is cooling, it may be time to start looking at rate cuts, right? So here's just a couple examples right here. Now take a look at some of these headlines here, what the Fed is talking about. They're putting it out there that they're looking for a reason to cut rates. They're not talking about cutting yet, but they're putting it out there. It's in the news. They're talking about it. They're not talking about doing it, but they're talking about what's needed to incentivize them to cut rates. Fed minutes, inflation is cooling, but more evidence needed for rate cuts. All these different headlines. Fed says not ready to cut rates until greater confidence inflation is cooling. Fed, inflation is cooling, more evidence is needed for rate cuts, right? So the narrative is out there that if inflation continues to cool, which means people are still getting worse off, people are still having to pay more because cost of living is still going up, but it's just going up less quickly. So the Fed's going to use that to possibly cut rates. And maybe that's what they'll use for, I think, the October crisis that we're going to see this year. They're going to bring that out to try to soften the blow or cushion the blow. But let's talk about home prices here. Look at this. Tennessee. Tennessee used to be considered an affordable place compared to the rest of the country. It's pretty affordable, right? Look at this. Median home sale price, East Tennessee, $365,000. Back in 2010, 11, 12, 13, you could have bought a home in California for that. In fact, $280,000 was the price that I paid in 2010 for a home in California. So Tennessee now, we're beyond where California was just 12 years ago or so. 365,000. San Diego now is $1 million. Look at this other headline, $1 million median home price. Other headlines that shows you that this inflation cost of living crisis is not just the U.S. Cost of renting a home in Australia hits a new high. Right, this is worldwide, folks. Anyone that still thinks that replacing the leader with another leader is going to fix things? Folks, no, this is a systemic problem. It's a global problem. Just like at the beginning, we talked about how when the current president took over in 2020, people thought the economy was going to crash, the stock market was going to crash. Folks, it's not about who's sitting behind there. That's just the person they want you to think is in control. They want you to think that person's running things, and they'll get people all riled up by putting these wedge issues out there that divide people and people can argue back and forth. That's done on purpose, folks. It's run by the banks. That's who runs the economy. That's who runs the world. And right now it's a worldwide problem where they're just dropping helicopter money across the globe. Banks able to loan out money. And people think the Fed, is the one that prints money. The central banks print money. That's true. But it's your bank, folks. It's your Bank of America. It's your Citibank. It's even your credit union. And there's even some news articles out there and some publicity out there about this. People are starting to talk about this more. This is out of positive money. How much money can banks create? Right? So if you don't know by now, banks don't have to have any money in reserves and they can still loan out money. Why? Because it's not anything physical. It's just digits on a screen. Right? You go get a loan, it's going to be transferred to your account. It's going to be transferred to the car dealer, wherever you're getting the loan from, digitally, folks. It's just digits on a screen. It's not backed by anything. Ever since the early 70s, we came off the gold standard. But the amount of money banks can create, it's unlimited. So to save you time, instead of going through this whole article, the answer to this question here, how much money can banks create? It's unlimited. I know that sounds crazy, insane, wild and wacky, but that's what we live in right now. That's what's happening. That's why you haven't seen a crash in the economy. That's why the real estate bubble hasn't went bust. That's why banks are not dropping limits on credit cards as people are still out spending money. Record holiday travel, folks. This is what's causing the whole thing, and most people still don't know this. Even people on this channel, I see down in the comments, how are people still spending money if the economy is bad? Please, if you see people making, I don't want to say the word, if you want, if you see people making those types of comments, just please let them know what's going on, how this whole thing works. That's what we're trying to do here. I just want people to understand how this works, because when you understand it, then if you've been one of these people waiting for a crash for the last 4, 5, 6, 7, 8 years, like I see some channels talking about, you might have gotten pulled under the wheel of economic confusion. Talk about bankruptcies and closures across Pennsylvania. Bankruptcies, closures rock senior care across Pennsylvania. The bankruptcies of 21 skilled nursing and personal care centers in Pennsylvania in 16 days are roiling long-term care for seniors and their families, while industry insiders warn the turmoil is far from over. So businesses going under, senior care centers going under. Where are these people going to go? The cost of senior care is just going to go up, and away. It's not going to come down. It's not going to be a crash. Things are just going to continue to get more expensive across the board. There's a couple areas where we are starting to see some price corrections. Real estate, we're seeing some prices come down in several cities in Texas and Florida. So it's going to be interesting how it plays out here. Look at this, go banking rates. Someone pays over $200 per month in credit card debt interest, and they're talking about they wish they would have known. So in other words, when rates were low, a lot of people thought that was going to be a forever thing, and they thought that inflation wasn't going to go higher. Of course, we told you here that the whole transitory narrative, that was a false and phony thing that was being put out there by the planners to keep people confident enough to go out and spend money. So basically, this person's saying if they would have known the way things were going to play out, that inflation wasn't going to stop going up, that cost of living wasn't going to come down, if they would have known that, then they wouldn't have spent so much money, and if they would have known about the rates, right? But people are finding out the hard way. But then again, people are filing bankruptcy left and right. There's even celebrities out here. Let's talk about this here. This is someone I never heard of, but a celebrity, I guess, entertainer, had to file their second bankruptcy here. Let me just bring it up here. Someone over, looks like in Europe here, Kelly Price, in her mansion worth £2 million today. Whenever this came out, June 26th, couple weeks ago, surrounded by bailiffs on eviction day as she undergoes her her chest modification. Bailiffs descended on Katie Price's mansion as she appeared to be evicted from her notorious home in Sussex because of recent financial struggles. Around 10 officials were seen at the 46-year-old sprawling multi-million-dollar property. She has declared bankruptcy twice. Right, so a lot of people that you see out there that look like they're doing well, they look like they're rich, right? They're doing fantastic. A lot of them are just playing the bankruptcy game, right? You act like you're rich, you just run up all kinds of debt, you borrow a bunch of money, and if you don't pay it off, you just file bankruptcy. Right? I'm not sure what the laws are over there. Here, it's every 10 years in the U.S. you could do that. So people, some people live bankruptcy to bankruptcy, and they look like they're living very well. And honestly, I know people that do a lot more things than I do. And my wife and I, we have the discussion all the time, frequently, that maybe we should do the same thing. Maybe we shouldn't be so restrictive on what we do. Maybe we should go to Disney World 3 times a year. Maybe we should have season passes to SeaWorld, all the amusement parks, Six Flags, etc., the zoo, and not worry about it. Just out traveling, spending money, not even caring, and then just file bankruptcy, right? We'd be able to do a lot more stuff and have a lot more fun. That's for sure. We honestly, we have that discussion. All right, let's shift gears a little bit here on the topic of de-dollarization in the BRICS nations. I'm looking at a headline here that's kind of shocking, actually. Nation of Zambia to jail people who use the U.S. dollar. Folks, I'm not making this up. In fact, let me just bring up some results here, just so you know I'm not making this up here. Using the US dollar when visiting South African countries could result in a 10-year jail sentence. Zambia has banned all transactions in dollars. Use the dollar, go to prison. Zambia's new capital controls. Zambia drafts penalties to curb dollarization. BRICS info. Zambia introduces plan to jail individuals using the US dollar. Now that's some pretty serious de-dollarization. What if this spreads to other countries? I couldn't imagine other countries doing this, but maybe. I mean, I wouldn't. I was surprised that any countries are doing that. Jailing people, folks, for using the US dollar. That's how bad some parts of the world consider the US dollar and in the United States' abuse of the world reserve currency. All right, 10 new countries may join BRICS in 2024. The BRICS alliance continues to expand, and the de-dollarization continues to widen, and it's getting more extreme, as you saw with the previous example, jailing people for using the dollar. I mean, come on. Insane, folks. Now, back on the topic of rate cuts, we talked about rate cuts earlier in the video. Another reason why I think rate cuts may be coming is because, just take a look at history, right? So here is a recent, just over the past few years, chart of the Fed funds rate, 3-year chart. And we see that ever since it was at rock bottom, 0.25%, Fed funds rate now 5.5, and it's been holding there now for a while, coming up on a year. Yeah, a year this month, actually. 5.5%, plateaued 5.5%. And historically, after the Fed funds rate plateaus, then you start seeing cuts. It rarely plateaus, especially for a year, and then resumes higher. Now, could it? Absolutely. If they can't manipulate the inflation numbers well enough to justify rate cuts, they may have to raise rates again, right? But here's what it looks like to me. Look at a 10-year chart here, right? So let's say 2019, raised rates, plateaued there for a few months at 2.5%, had to cut. Of course, 2020 was the justification for that. But they even started dropping them in 2019, though. It's like almost seems like they knew what was coming. Go out to a longer term chart here. Every time they've raised rates and then plateaued, here's the late 80s, they had to cut. Here they plateaued for a few months, they cut, and then they cut a little more. They went back up, couldn't raise them anymore in 2000, 2001 events, back down. Housing crisis there, financial crisis, housing bubble era, 2006, 2009, plateaued for about a year and a half, maybe just under 2 years. Cut them down again to rock bottom. The rest is history. You knew rock bottom rates then for close to 10 years. So that's another thing, too, that leads me to believe that rate cuts could be around the corner. And with the risk out there right now with World War III, black swans flying around everywhere overhead, I definitely think something big is on the horizon. And I'm thinking, again, October. Let me know what you think about the timeline, right? A couple more things to touch on here before we get out of here today. We talked at last episode about thousands of Walgreens being closed. We've got Rite Aid announcing more store closures here just recently. This just came out today. What else here? Bob's stores closing all locations. We don't have Bob's out here. We got Bob's Furniture, but this is a different Bob's. Closing all locations. Bob's stores closing all locations. A discount clothing and shoe retailer with several locations across Connecticut and Massachusetts going out of business, closing all of its stores. So yes, people are still out there spending money. Banks are still loaning out money for the most part. Very few banks are actually tightening, but people are being more selective on what they're spending their money on. Yes, they're still traveling. That's American pastime, travel. Guzzle the gas, right? So, all right, what do you guys think about this? What do you think about the stock market S&P 500 all-time high? And it could go higher, folks, until one of these black swans comes down and shuts everything down, and that could bring the market down, but likely not for long, because you notice what happened last time in 2020. The markets came down, but then all the millionaires and billionaires, they came in and bought these stocks for a sale price and pushed it right back up again, right? So be ready for it, folks. Let me know what you think about all this chaos, insanity down in comments. Make sure you're subscribed, and we'll see everybody very soon. Keep stacking, y'all. Bye for now. Peace. And happy Independence Day.